Mr. Anand Deshpande, founder, MD and CEO of Persistent Systems. Mr. Deshpande, good morning. Good to have you on Trading Hour, sir. Now, NASSCOM sounding a little sanguine, and then we have Accenture lowering the upper end of their guidance as well. You had a blowout here in FY17. In fact, I'm looking at the numbers now. Your revenue, dollar revenue, was up over 20%. When you hear these kind of, estimates being put out by the industry and other larger companies, what's the takeaway your shareholders should have?
No, see, the industry is clearly going through a transformation, predominantly driven by the fact that the effort required for the same work is going down. There are new technology shifts that have made it possible to do the same work with a lot less people. So that's really what is causing the transformation. We have seen this in the works for the last couple of years, and I think this will continue for another 2 to 3 years, where the new work is quite different from the old work that we have been doing for many years.
Okay. So when you talk about FY18 for yourself, sir, what is the guidance that you can probably provide us?
See, we are not doing precise guidance, partly because it's kind of hard to make these kinds of estimates. But overall, what we have focused on is to... Hello?
Yes,
Sorry.
Go ahead.
No, so as what we have been trying to do for the last couple of years has been to move our revenues, which was effort-based, to moving into more IT and digital kind of business. And those parts of the business are growing well, while we do have some headwinds on our existing services business that we are aware of. So we do still think that the IP that we have acquired and built out and other stuff should give us better returns this year.
Would you be as good as your dollar revenue growth in FY17, which was 22%, or are you...
So last year we had an acquisition that was a big part of that number. So without any acquisitions this year, we should be in the low teens is sort of where we are looking at our numbers. Low double digits is how I would say it.
So low double digits growth for FY18. That, sir, should still keep the market very happy given the environment and given the commentary. How do you propose to sort of achieve this? And you're talking about more of the digital business. How do you think the pie is going to look for Persistent this year? And when you're talking of this kind of growth, then how's the margin picture looking like?
See, it's going to be a little bit back-ended as well to some extent, partly because of the changes that are happening in the market. We have a set of IP and digital business that we are working on, which should give us better growth rates. And the margins also, see again, when we did the acquisition that we did last year with IBM and other investments we have made, our margin has suffered in the last 2 years. We do expect that margin to turn the corner by the end of this year. And the reason is that some of the overhang that we had on the IBM business should be over by the end of in the second half of the year.
Okay. How has the business environment changed for you, sir, say from the start of this fiscal? Because TCS just had an analyst meet, or they had met a couple of analysts, and they said, the spending uptick which was actually expected in BFSI hasn't materialized as anticipated. Accenture has, cautioned on the healthcare vertical as well. What's changed on the ground for you?
Nothing in particular. We are not that sensitive to these large changes in some sense. Most of our business is coming from a set of customers which are, individually, picked up in some sense. So we have not seen anything specific happening in one quarter. But as I said earlier, a lot of the business shift is happening because of the transformations that we are seeing on the ground, where people are buying next generation stuff. And the stuff we used to do, which was all effort-based work, actually is getting far more efficient. So one can do it with a lot less people. And that is causing, projects to compress a bit.
Speaking of people, sir, and just going back to your earlier point, you're saying that margins should normalize because you will be digesting that acquisition now. So when you say normalize, what does that mean? 17%, which is where you were, I think, the previous financial year?
It'd be hard to make clear numbers for this quarter right now or this year. I think what will be visible is that at the end of the year, the numbers that you see, we'll be able to improve on that. See, the reason I say that is that the newer business that we are acquiring is coming in at healthier margins than the services business that we are in. And then in addition to that, the changes in investments that we have been making hopefully should be on a larger fraction of the business than the ones we have seen in the past.
Just to understand, because I mean, this is the real where the growth lies, right? Can you give us some color on what kind of business? Is it in cloud, digital? What kind of clients are you working with?
Correct. So, see, we have made a few announcements in the last few weeks as well around IPs that we have acquired and built out. So what we are doing more and more is that instead of selling just services projects, we are selling IP plus services. So we did recently announced a partnership with USAA where we have built out IP for risk-based access control, which is very useful for people who are chief risk officers. So that's a solution that's pre-built. We sell it as an IP license and then do services on top of that. So our business model, which was traditionally all services, is shifting right now from being pure services to being IP plus services in some sense, which is how we are trying to sell in the digital markets right now. Okay. And the ability to deliver quickly is what happens when you have something pre-built. But clearly, this is very different from what we have done in the past. But, that's where the changes have been in the pipeline for the last couple of years.
Any plans of utilizing the cash on books?
So we are not doing any buybacks, and we are going to look at, we have announced or requested in the AGM ESOP plan, which is fairly small, but that is the other thing that will happen. But overall, we'll look for acquisitions in the digital area, which might help us in changing our mix from being all services to solution-based things. And we are looking for companies which will give us front-end skills to sell and deliver these kinds of solutions differently.
Okay. All right. Fair enough, Mr. Deshpande. A lot of questions, but we've completely